Reliance Nippon Life AMC. But let's shift the focus back on some more earnings that we've got. Paper manufacturing company JK Paper has posted a subdued second quarter this time. Profit is down to 57 crore rupees and margins have also shrunk this time. How does the company see its forthcoming quarters really panning out? Let's get some insight from V. Kumaraswamy, Chief Financial Officer at JK Papers. Sir, good to have you on the show. You know, this was the first quarter post GST implementation. Just take us through really what kind of impact you've seen on that front, especially in terms of volume.
Yeah. Nice to be on your show. It did have some kind of an impact for the first about maybe 3 to 4 weeks, but we had taken enough precautions in training all our distributors and further wholesalers, etc. So it came to our rescue. I guess things are now back to normal, and the flow of goods as well as flow of receipts, etc. is quite normal now. But if you see our results, they did have some kind of an impact in the quarterly results, which is also, part of it is due to GST, part of it is also some kind of disruptions to our water supply which took place at the main plant in Odisha. So that's what accounted for the dip. So I would say GST, in the long-term interests of everybody complying with and paying taxes, has been a very small sacrifice for 3-4 weeks that we have had to pay, by citing a good sacrifice.
Right. Mr. Kumaraswamy, if you can also tell us how is the hardwood costing panning out to be, and thereby I want to understand what the impact on gross margins has been. Are you, do you really have ample elbow room on the pricing side to, have comfort on the gross margins?
See, this quarter there have been 2 or 3 factors which pulled down our, pulled up our costs. One is, of course, the coal. There has been a disruption in supplies of linkage coal, so which is much cheaper. So we had to buy almost all our coal from the open market, which is much costlier. There has been some impact on the manpower costs and power and fuel expenses as well. But it's been compensated by wood costs. As you know, we have taken a tremendous amount of effort in growing wood near our factories, and without compromising the payouts to the farmers, we have been able to bring down the costs quarter on quarter for the last about 8 or 9 quarters. That is because of the shorter distances that we have had to procure our raw materials. If you need some numbers, between the same period last year and this year, there's been a 5% drop in the total wood cost of the company. In terms of realizations, yes, there are some impediments to better realizations, because imports, especially the uncoated wood tree, is coming freely from Indonesia at slightly reduced prices. Although we do retain our brand margins, things are beginning to be difficult. But if you compare it to the same period last year, we did realize about 5% better margins than last year. So better margins and better raw material prices helped us tame the other cost inflation factors.
Sir, speaking about realizations, your copier market share is now around 24%. Can you tell us how has the pricing worked out in the copier market share? Has there been some pressure that's been seen there?
As I told you, there has been some increase over the same period last year, but there's been a dip in the last quarter. So, and there are some price pressures because of imports.
Right, sir. This time around, your performance was aided a bit by lower finance costs. Of course, along with the falling interest rates, you've also been working towards deleveraging and some better capital management. Is this going to continue being the focus ahead? Any outlook you can share?
Yeah, as you can see, we got a double upgrade from all the rating agencies in the last about 3 to 4 months, and we have been using our cash in the last about 8 quarters in running down our debt. And because of better leveraging as well as the rating increase, we have been able to negotiate most of our loans down. So we have managed to get about 1.5 to 2% reduction in most of our loans, as well as elongated the terms also, so that there is a much leaner repayment from quarter to quarter from now on. We have also been able to manage our forex exposures very well, and that's how you see a reduction. I would say 1/3 of the reduction has come from because of lesser amount of capital that we are using now because of repayments done. Maybe about 1/3 from the better rates that we have been able to negotiate, and we have also got some mark-to-market gains from forex, which is about 5 odd crores. So this is how the interest costs have been brought down sharply.
So can you give us a sense of how the EBITDA margin is likely to look like, going ahead into the second half, depending on what volume growth do you see? And can you share a number with us for the volume growth in this quarter in the copier market?
As I told you, we lost about 6,000 to 7,000 tons because of our internal disruptions, plus a little bit more on GST. Hopefully this quarter and the next we will be able to catch up on those two factors back. And the coal prices, I think, will have to soften because I think we'll get some more coal from the linkages. So there must be some softening effect. Raw material prices will continue to decline, but at a much more moderated pace. We are taking some actions against import threats from Indonesia, as you must have seen from the papers. Hopefully, when the investigation etc. is over, there should be some amount of uptick in the prices of uncoated wood-free. And as you know, the pulp prices abroad also has gone up sharply from late 500 levels to about almost 800 levels. This has pushed up some of the prices of converted products, especially in the coated etc. This will have an impact, and to that extent, since we are fully integrated with pulp, we will be able to get some benefit out of it. So next quarter and the next, we are looking at it optimistically, and hope the coal will return back to its normalcy.
And so one last query that we had, there was one tranche of FCCBs that was converted in the third quarter last year, equity dilution I think of 4.8%. Would it go, or has it gone to 18.8 crore shares, a dilution of 21%? If you can apprise us with the update.
No, actually the total, all the FCCBs balance, if they are converted, the total outstanding capital will be 178.2, not 188 as you mentioned. Because the first tranche they didn't convert, it was repaid. The balance for bulk of it has been converted. Just one is outstanding on which we are yet to receive notice, but they have time till May 2018 to convert. So most of the shares have come into the market except the last tranche, and they have been absorbed very well by the individual investors by and large.
But May is the time till which we are supposed to wait to get some more clarity on the incremental dilution.
Well, I guess if you look at the conversion price, which is about 56.35 or something, and the current market price, the intended action of the investor is very clear.
All right, Mr. Kumaraswamy, that's all that we have for you, but thank you so much for joining in and giving us a detailed view on how your earnings have been and what the outlook looks like as well going ahead for the future. But that's all the time that we have on this edition of Trending Today.
Lots more news and updates lined up on the other side. Thanks for watching.